I'm Andrew Dix. I am the founder of Crowded Media Group. We publish Crowdfund Insider. First of all, I want to thank Craig and everybody at the NCFA who put this together, which I think means Craig, because you work like 24 hours a day organizing this stuff, and I think he does a great job. I really do. I was fortunate enough to go to Toronto last year, and I'm very impressed with his organizational abilities and bringing everybody here together in an event like this. So thank you very much, Craig. We have an interesting panel today that's competing with learning how to make 20 times your money in ICOs. So, I think we're very important too, but anytime you can make 20 times your money, it's a pretty compelling offer. I have a very diverse group of people who are going to help edify everybody here about raising money from the Napkin to possibly an ICO. Diverse group. We have Peter Paul Van Hoeken. He's the CEO and founder of FrontFunder. We have Doug McLean, who's the CTO of Catapult. Right there, thank you very much. We have Marcus New, who's the founder and CEO of InvestorIdeas. Right. We have Ali Pordat. Yes. He's from CEO of Progresso. And then we have Mike Volker, who is the most famous angel in all of Vancouver, right? Or British Columbia. Canada. Yeah, Western Canada, okay. So he's famous. Nobody else, not so much, but Mike is a famous guy. You need to know him. I'm going to start down at the end there with Doug, and I'm going to ask everybody to kind of explain who they are, what they're doing right now, so kind of a 2-minute explanation of why you were here very quickly, please. So,
can you hear me?
No.
Now can you hear me? Yes. Cool. So, yeah, my name is Doug McLean. I'm the CTO of Catapult. Catapult is a software as a service providing alternative finance, investor management for a global customer base. We've got solutions in peer-to-peer lending, commercial real estate, and private equity. So that means that a company can come to us, they can get a portal spun up to manage their investors and issuers and do raises on our platform. We're listed on the Toronto Stock Exchange Venture Exchange, and we're implementing blockchain technology into our system to create a secondary market for private capital. We find that to be something that's demanded in the UK and Singapore, some more sophisticated markets where they want to see that investors have access to liquidity on private capital. So with Catapult, an investor can come to the site, they can sign up for an account, they can go through all the regulatory processes of onboarding, including KYC, AML, suitability, accreditation if necessary, and invest in the deal. Our secondary market product will allow for a coin to be minted after that. It could be a share token, and then that share token would be distributed to the investors, and they'd be able to trade those share tokens and access liquidity. We also have the connections on the issuer side, and so customers can onboard issuers, whether that's a loan application under a peer-to-peer system, or whether that's a company profile if it's a private equity system. So we have all of those custom pieces can be built out, installed on the Catapult platform. You can have a platform operating in 6 to 8 weeks after signing a license. The interesting thing about our blockchain integration is that we're not doing an ICO as a main piece here. You can do your ICOs on Catapult, but it's not the main component. We're really focused on how do we use blockchain to add more value to Catapult and be able to add more blockchain technology to the Catapult system to provide that computable trust, to provide that the enforceability, all those pieces that we need to see in private capital markets. So we have a couple other blockchain products that we will be announcing later this year too.
Excellent. Thank you very much, Tom. More blockchain, right? Like more Catapult. Right. Peter Paul, tell me. No.
That's better. Yes.
Yeah.
So my name is Peter Paul. I'm founder and CEO of FrontFunder. I was actually thinking it's a bit of a deja vu for me here today. I was exactly in the same place just over 3 years ago when I organized, excuse me, a conference on the phenomenon at that time of equity crowdfunding. and it was very much like an elephant in a dark room. You know, everybody's holding these, nobody really knows what it is. And of course, familiar face as well. I remember meeting Mike in the early days when I had this idea to build an online funding investment platform in Canada, not fully aware yet of the complexities with regulation whatsoever. Fast forwarding, a lot has happened. We basically have now investment crowdfunding in Canada. We have also a bunch of new rules across the country, not necessarily. Love to see sort of harmonized rules that didn't happen, but we can work with it. And I think it's fair to say that we can also conclude that, you know, investment crowdfunding, or even fully broader investing in the private markets, is here to stay. We already knew it actually 3 years ago, because in other markets like the UK, Australia, they're ahead with all of this, and we see that it has become already a mainstream source of financing. If you're on a tube in London, you'll see advertisements on the tube about platforms like VanFUNDING, where anyone can invest in the startups that they believe in. So it's clearly something to stay. It's growing fast. A couple of points about VanFUNDING. So my platform, after we figured out all the rules and technology, etc., we launched the platform in mid-2015. We rolled it out nationally. I think it's fair to say that today we are the leading platform connecting companies, early stage companies, with the wider investor community, the public. Our sweet spot is anywhere between 250K to 2 million. What we see now, the deal size grow as we participate as well and then become the designated online platform. So we're operating in 8 provinces. We closed 15 deals to date, including ourselves. So we drank our own whiskey for ourselves on our platform. With success, we raised $650,000 from over 230 investors. Now, the thing is with crowdfunding, and it's similar to what we're discussing today with blockchain ICOs, is that it's so much more than just the funding itself, right? So we basically enable companies, and now even a company that's in a really early stage, to raise capital from the wider investor community. Not only raising the funds, but also, you know, getting a whole bunch of people that like what you're doing, and they even have more reason to talk about it because they literally have a vested interest. So I see my 230 shareholders as brand champions. So when I have an AGM, I plan it at a time and a place where I hope that everybody comes, because I like to see them, and I like to share our successes, and I like them to pass it on and tell all the good stuff we're doing and bring us deals, etc. So it's a whole new way of, you know, blending funding with creating awareness around your company. And what's happening now in the ICO, we're obviously ICO space, we're following it closely, as it is both driven by regulation, depends on what kind of ICOs it is, and secondly, it's typically crowd sales. So we're very well positioned to tap into that opportunity as well.
Excellent, thank you very much. Ali. Yes.
Okay, great. So my name's Ali Pordat. I'm the CEO and co-founder of Progressa. We are a Vancouver-based consumer finance company. We have about 118 people in 2 offices in Vancouver and Toronto, and we're a coast-to-coast business. So why am I here? Well, we've raised about $50 million plus of private capital since inception, and so that's across the debt and the equity markets. So I have a little bit of experience on the seed side and growth capital side. And today, you know, we have probably about 500 or plus stakeholders in our business across our shareholder base, our bondholder base, and our employees. And so, you know, certainly a lot of different competing pressures as we reach a certain point in our scale. Today, we're focused on our Series B financing, but certainly a lot of pressure and a lot of talk about blockchain these days. And so I'm happy to sort of talk about those pressures and how you counterbalance those things when you're a company of our size.
Excellent, thank you very much. Marcus.
Hi, my name is Marcus New. I'm the Chief Entrepreneur for InvestX. So we provide an electronic platform that allows investors to aggregate their capital, invest in pre-IPO companies, and an asset class known as growth equity. So our criteria, for example, are companies that are worth at least $1 billion. So we've invested in Uber, we've invested in Lyft, we've invested in Spotify, Pinterest, Dropbox, DocuSign, the top global brand companies in the world. We give access to investors by aggregating, using the crowd kind of concepts, but being able to aggregate smaller amounts, put them together to be able to create access to this very, very important type of company. This company is very different than small cap and startup companies, obviously. Most of them are over $1 billion in revenue, most of them have more than 5,000 employees, and most of them have more than $1 billion invested capital. But it's been largely an institutional market where there's been a small group of club players in the institutional market that have been able to get access and not retail investors or high net worth investors, which is what we help get access to this asset class. So everything's electronically on our site. Our site also integrates into dealer platforms. We've raised just under $40 million across our platform. So it's been a great success so far, and we've got a lot of other great companies we'll be offering and a lot of other unique products, all related to these billion-dollar private companies pre-IPO.
Excellent, thank you very much. Mike.
There we go. Thanks. And in contrast to what Marcus just said, I'm at the other end of the spectrum. So my name is Mike Volker, and I've been doing angel investing for about 30 years now. I'm here looking for deals. The good news is that
he's looking to give you guys money, so be certain you corner him after this, man.
There's, the good news for you guys is there's lots of capital looking for a home. The challenge is to make that match and to do it through a compelling business proposition. And then I have a public fund, and I work with Mike Walkinshaw, who's sitting over there. Mike, put your hand up. And we do later stage financing. So once you get past the startup stages and you're in revenue and you're looking for more like $1 million or $2 million, then Mike and I can help you with that. So we kind of cover the early stage spectrum, and as I mentioned, we're here to talk to entrepreneurs to see if you've got any investable opportunities for us to seriously consider.
So we're going to jump over to the other side of the spectrum with Marcus, because you just said you don't want to be an angel because you're going to lose all your money, right? So you're looking to invest in later stage companies that are kind of de-risk. It's kind of a layup, right? So what type of value are you adding here?
I think, Mike, I don't know if you told me this stat, 93% of angels lose their money. That's a tough number. I think that, I personally made over 150 investments, private placements in the venture stock exchange, public companies. So I've seen what I would say is angel investing, at least with some liquidity, thankfully. Or some of them actually didn't have any liquidity, but that's a different story. So the concept of what we really came to recognize was that there was a shift in the public equity markets, or in the private markets that was affecting the public markets. And this really happened over the last 15 years. Some people think it was Sarbanes-Oxley in 2002 that created it, but or was the catalyst for it. But the shift was that companies were staying private a lot longer that were private. And so they were going to venture capital, so they'd take Mike's money, they'd be successful, they'd keep going, they'd get more and more money. And if you think about those companies, they're really going through the business risk curve. And by the time they get to the end, they'd have a trade sale, so they'd be an M&A transaction, they'd have an IPO. In fact, if you looked at Amazon went public at $600 million, if you looked at Dell, Starbucks, it went public around $250 million, and all the money got made in the public markets. And that's how the industry worked forever. And about 10, 15 years ago, there was a change where those winners didn't go public and didn't get sold, and a new investor came in. His name was Fidelity, Wellington, T. Rowe, Goldman Sachs, and they started giving money to these winners, these big winners, and help them grow faster. And the problem was it's a club game. There was a small group of institutional investors, about 20 of them, that made all the money. And so you look at Facebook, it went public at $63 billion compared to Amazon at $600 million, and 100 people made all the money outside employees only. And so you look at that, and we said, we need to create access to that. We need to take de-risk businesses. I'm not saying there's no risk in Spotify, but Spotify's $5.5 billion in revenue. Number one in its class. It's at $2 billion invested capital. And it's global. It's got 160 million customers. It's a little bit different kind of company. And so where we could get access to the return. So what's the value we add? It's getting access. It's really hard to get access to these shares and to these companies. It's really, really, really difficult. But we've created kind of this ground troop kind of desert storm approach where we do the work. We was in the Valley again 2 weeks ago. I'm in Chicago next week. And so we do the work building relationships with the venture community, the venture capital community, the private equity community, early shareholders, so we can get access, which is the toughest part of the value we drive for customers. So then they get access to the number one asset class. Cambridge says growth equity is the number one asset class, period. And if you look at a risk-reward basis to gold or Canadian equities, it's outstanding. I mean, it's lower risk. From a standard deviation perspective, much better return. So the problem is retail can't get access to it.
That's right, yeah. Okay, so we're going to jump over to Peter Paul. So you're going to have to help me better understand as to where Front Funder stands in the capital stack. Are you competing with this nice angel here? Are you later stage? You know, where in the spectrum of that capital ladder does Front Funders sit today?
Yeah, so I was listening to with interest to what Mike was saying, and he already must have a really good day today, or it's really that simple. But I would like to say the following. First of all, and that's why when I had this whole idea about investing in private companies online, one of the first people, of course, being a super angel like Mike, and got to talk to Mike about that, which we did, right? And I've always seen this as complementary. Like we're not competing. We can see it like that, but it's not. It's sort of complementary. All I guess we're doing here with online investing is we're kind of a new kid on the block, and we're saying, so why is it only these very few angels that are actually angels? So why is not all of you? Who would like to be an angel investor here? Come on. Okay. So the thing is that we're basically enabling investing in small companies and open it up for everyone. And in terms of due diligence, we perform due diligence as well to make sure that whatever we put on our platform has been vetted. But other than that, it is, as you mentioned, it's high risk. Early stage investing is typically high risk. But if you enable a much wider group of investors to participate in that, and they don't need to worry about sort of basic due diligence concerns that they should be worried about, because that's us as a platform taking care of that in terms of vetting these companies, and then it becomes really interesting to open it up for the public. So I would say that we're fishing in the same pond as angel investors. We also like to, as I mentioned, co-invest. And that's why we recently closed a partnership with the Kretsu Forum just 2 weeks ago. Where we basically jointly look at deal flow that we bring on our platform. So we have angel investors that act as kind of the lead investors on these deals, and bring them on the platform and open it up to a much wider group to invest in. Well, they have concerns about ICOs and probably should have. So they're basically saying, look, those ICOs that are utilities are not securities, but those that are where security and investment and where expectation of return on investment may well qualify as a security. So we as Front Funder are particularly focusing on the latter, because those are the ones that will be subject to securities regulation. Secondly, of course, the ICOs per definition are crowd sales. So we are very well positioned to help companies that are considering to do an ICO to bring it through our platform. So we're currently working on a solution, and again, it comes down also building up our capabilities, and we're a possible partner with others to make sure that we get the quality ICOs on our platform.
Yeah, you want to be compliant. You don't want to have the regulators come bust into your door.
Well, it's not even go beyond that, because you could, as long as you disclose everything, you can put rubbish in your platform, and you say, hey, I disclosed it. It just doesn't make any sense, but I disclosed it, I'm compliant. And I think we want to take it one step further. We're saying, look, we're not only just compliant and make sure we're on side with the securities rules, but we also want to sort of, protect our investors with, against just deals that shouldn't get a single token.
Yeah, did you want to add something? Yeah.
I was just going to say, what I see in the ICO world is that we end up with these people that raise a lot of money, and then they need to be able to communicate back to the investors. If they don't do that, we're going to see more class action lawsuits, we're going to see different things happening. It could be that they're being very successful and acting honestly, but if that communication's not there, then trust isn't there, then things get upset. Capital really has that investor management piece tied to it, and we were really excited to do an ICO to provide that same institute for the same kind of investor management experience.
Yeah, excellent. Yeah. Did you? Go ahead.
Just a quick comment. Andrew, the securities regulators, of course, have always been concerned about early stage funding. They were a little bit slow at getting crowdfunding in place, and now, of course, they're wrestling with ICOs. And I've always maintained that for early stage investing, including what I do, angel investing, it's really not the Securities Commission that should regulate, but rather the BC Lotteries Corporation.